Welcome to our PMP demo class from Simplilearn. Our agenda today is that we'll first talk a little bit about myself and introduce myself, and then we'll talk about why the PMP from Simplilearn, what you get out of that essentially, and then we'll go into our course agenda, the full course agenda, demonstrate a class topic, which is cost management, and a subset of cost management, which will be interactive. And then we'll talk about briefly a case study, and then we'll review why Simplilearn, or go through the background of Simplilearn and the value that we bring to the table. My name is Paula Schaefer. I am a PMP, and I am currently a consultant in project management. The name of my company is Tomorrow's Enterprise, and I am also obviously an instructor for Simplilearn. And in addition to my consulting, I am adjunct faculty for Granite State College in New Hampshire here in the United States, where I'm based. In the past, I've been a senior instructor for ESI International, which is merged with another company and has a new name now. Adjunct faculty, I was also in the past adjunct faculty for Northeastern University in Boston, Massachusetts in the U.S. I have also been in the past a manager for the IT PMO at Hong Kong International Terminals, HIT, and a consultant for the Institute for Software Process Improvement, where I focus on project management. And I've been a senior consultant and for Digital Equipment Corporation as a project manager also there. I managed contract projects that we delivered on contracts to our customer base. From Simplilearn, again, what you get from us, or why you would pursue the PMP with Simplilearn. One is that you would clear or pass the exam in the first attempt with our hands-on learning approach, where our learning includes case studies, real-world examples, tips and tricks, videos, and much more. We will clarify all your doubts, answer your questions by attending live classes multiple times with our all-course pass. And you get a dynamic community support through our forum called Simply Talk. Now, in our PMP exam course, our 4-day PMP exam course, we cover the 10 knowledge areas described in the project management body of knowledge, which are listed here, from integration management, which is integrating the entire other knowledge areas. It's about project management integration, not necessarily some other type of integration. And when we integrate, the elements that we integrate in the project are the scope, which is the product and the project, the work we have to do to produce the product. Time management is producing a schedule and delivering our project on time. Project cost management is producing a realistic budget and meeting that budget. Project quality management is about ensuring that the product meets our customer needs. Human resource management is about managing a team of people who work on the project. Project communication management is ensuring smooth communications throughout the life of the project. Project risk management is about managing the uncertainties on the projects. And project procurement management is used when we outsource. We either hire contractors to produce work, or we purchase rather from outside of our organization materials, supplies, equipment, that sort of thing. And stakeholder management, project stakeholder management, is about managing the engagement of the people who affect our project or make decisions that affect our project or are affected by our project as well. What you get by attending this course is, again, the relevant knowledge and skills required to attain the PMP. We focus on passing the exam in our course and not teaching you how to manage projects. Our assumption when you come to our course is that you are experienced project managers and that you will, and you're simply looking to understand the key aspects of project management that are that the PMP exam tests you on. You also earn the required 35 PDUs, professional development units, or course hours, basically, that you need to have in order to submit your application or to be approved to take the exam. You will develop a working knowledge of the 5 process groups, which are initiating, planning, executing, monitoring and controlling, and closing a project or a phase in a project, and of course the 10 knowledge areas that I just mentioned. And you learn about managing, executing, and delivering projects successfully in line with global project management best practices. But again, that's from the perspective of passing the exam. We don't spend a lot of time on how to manage projects. We assume that, again, that's what you're doing already, and you know how to do that, and you're here to simply understand what you need to do to pass the exam. So let's get into our topic here, which is cost management, and we're looking at simply a subset of project cost management, which is the earned value portion of cost management. This is key to passing the PMP exam. Before we start this, I want to emphasize one underlying assumption that, if it isn't already obvious to you, that is embedded throughout the PMBOK, the Project Management Body of Knowledge, which is the standard that the exam is based on. And that underlying assumption is that the projects you manage are very, very large projects, that you have often a multi-year project, that you have a budget that is very large. Often, again, this would be a small project from the PMBOK's point of view that we're going to talk about with this example, and that more likely you would have a multi-year project. It would be a 10 or 15 million US dollar project or more, or even larger than that, and you would manage hundreds of people working on this project. So given that underlying assumption, then earned value is very important, because the project is too large for project managers to dive into the details of an individual work package. So we need something that will allow us to assess our progress at the aggregate or the high level of the entire project without getting into the details. And that's what earned value really does for us. So here is an example or a question for you. Please, again, you're managing a project to remodel one of the larger stores that is owned by the corporation where you work. The total budget allocation for this project is $850,000. At the end of the first quarter of this 9-month-long project, you have budgeted to have spent $350,000, but have spent only $310,000. What's your assessment? How is the project doing? The answer is there's not enough information. It may appear that we have, if I go back here, that we're under budget because we've budgeted to have spent $350,000 and we have spent less than that. We've spent $310,000. But the answer to this question depends on how much work has actually been accomplished, and that is really important. So as I said before, there's not enough information when you simply see the budget. This is called nowadays traditional project management. When we go back here, and it talks about how we have, again, we look at a budget of $350,000 we had planned, and we've only spent $310,000. Without knowing how much work we've done, we don't know the true project status. And this is called traditional project management, because before earned value was used widely in project management, what would happen is a project manager might look at the budget in isolation and the schedule separately. And so we'd look at this and say, oh, we're under budget, we're fine. Without thinking about the budget, we would look separately at the schedule and we'd say, no, we're behind schedule by about a month, and here's my plan to get back on schedule. Not realizing that what, of course, is happening is I'm behind schedule. The fact that I'm behind schedule is making me look as though I'm under budget. And so if we're only 20% complete the project over budget, but if we've completed all the work, obviously the project is under budget. So it depends on how much work has been done. So here's an example project. You're managing a project with 5 phases as depicted below. Each phase is planned as seen below. What's the status of the project at the end of the 3rd month? Again, the 3rd month is right here at this point in time where I'm waving my cursor up and down. So as we see 5 phases, here's the budget for each phase, and the first phase was planned to start and finish in the first month, and the second phase was planned, and it did finish, by the way, and the second phase was planned to have started in the second month and finished in the planned to finish, and it did finish in the third month. The third phase was planned to have started in month 3 after phase 2 was finished, and it's planned to have finished in month 3. However, we look over here at the status, and we find that phase 1 is complete, and we spent $2,000 on it. Phase 2 is complete. We've spent $6,500 on it, but phase 3 is not yet started. All right, so looking at this small, simple project, essentially we should be able to see that we are behind schedule because this should have been finished. Phase 3 should have been finished, and it's not. And if you look at it carefully, we are indeed over budget. So here's the budget. The planned budget for the first 3 years, first three phases is $10,000, $3,000, $5,000, $2,000. And the actual money we've spent is $8,500. If we were using what I called before traditional project management, it might look like we're under budget. But in fact, what we should do is compare the money we spent to the work that was completed in spending that money. So if we look at this one, this first phase, we spent $2,000, had a budget of $3,000, so we were under budget on that particular phase. But the second phase, we completed it, we spent $6,500 on a $5,000 budget for that phase, so we were over budget there. And so hopefully this is clear here, one of the things before I want to move on, so we would say that the project is over budget by $500. Also, something that many people have a hard time with when they first begin to use earned value is that the fact that we're going to say I'm behind schedule because phase 3 is not completed. I'm behind schedule by $2,000. All right, so I'm going to use money to measure my schedule as well. Earned value management is a method to measure project performance against project baselines. It results from an earned value analysis indicating potential deviation from the project cost and or schedule baseline. So we're applying currency as the measure, or using currency as the measure of not only our budget but our schedule as well. And here are the basic terms, or some of the basic terms that are used in earned value. Planned value, or PV, is the authorized budget assigned to the scheduled work. The actual budget that was assigned or estimated for the work that we scheduled to have completed as of the day we're evaluating the project. That's the $10,000 from that prior schedule. The earned value is the work performed, the budget for the work performed. This is what's different about earned value, or what makes it more useful, is that the earned value is calculated here. This is the difference between the traditional way. We're not evaluating the work based on the budget for the work as opposed to the budget that was planned. Actual cost is the money that was spent. Budget at completion is the budgeted amount for the total work of the project as a whole, including the future work. Estimate at completion is the expected total cost for the project. In the middle of the project, with the large projects that the PMBOK assumes and the PMP exam assumes, we basically are not going to stop and estimate our project every month. We would never get any work done. We'd spend all of our time estimating. So in the middle of phases in the project, we still want to estimate or forecast how much money we think we will have spent by the end of the project, and that's what we mean by estimate at completion. Estimate to complete is the money I need to finish the project. Estimate at completion includes the money I've already spent, essentially. And variance at completion is the difference between the BAC and EAC, budget at completion and estimate at completion, which is, again, how much I'm going to be over or under budget for at the end of the project. Expect at least 10 to 15 questions on earned value in some manner. Questions can be as simple as the definition of earned value, like you see here. Earned value management is a method to measure project performance against baselines, or they could be more complicated where they ask you to evaluate project by giving you information. They are actually known to ask the question that I asked to be at the beginning of this, or something similar to that, where they give you the planned value, or would be the $350,000, and the actual cost of $310,000, and ask you to evaluate the project, and the right answer is there's not enough information. They might ask you that. 10 to 15 questions on earned value. Now here are the acronyms that are used for the calculations from our earned value, planned value, etc. The first two are variances, cost variance and schedule variance. And they're the difference between your baseline and your actual progress. With cost variance, your baseline is earned value at a certain point of time minus actual cost. So the difference in of the budget for the work that we planned and the actual cost is cost variance, earned value minus actual cost. And if that is negative, in other words, the costs are higher than the baseline, that would make that negative, and that means you're over budget. If the number is positive, you're under budget. Schedule variance is the difference between your progress and your plan. So that is earned value minus planned value. If that's negative, you're behind schedule. If it's positive, you're ahead of schedule. And those two give you raw numbers. They'll give you a number like minus $500, I'm over budget by $500, or minus $2,000, I'm behind schedule by $2,000. Cost performance index and schedule performance index, the way I use them, which helps me to make sense myself personally, is they tell me how bad that is. If I were over budget by $500 on a $1,000 project halfway through it, I'm in serious trouble. But if I were $500 over budget on a $1 million budget, I'd be ecstatic to be that close. And the same thing with schedule variance. If it's a small percentage then of my schedule or my overall budget at completion, then it's good. But if it's really close, if it's very large, then it's bad. And that's what CPI, in my mind, CPI and SPI tell me. However, the language that you need to understand that may get tested is what we see here. Earned cost performance index, CPI, is earned value divided by actual cost. And schedule performance index is earned value divided by planned value. Cost performance index tells me the worth of work, how much work I've gotten out of every dollar I spent. So if you are over budget, then actual cost is higher than earned value, so this number is less than 1. So numbers for your indices that are less than 1 indicate you are over budget or behind schedule, and numbers that are greater than 1 are a positive, would make the variance positive, so that means you are under budget or ahead of schedule. Schedule performance index is earned value divided by planned value, and that's telling you what the percentage progress is made against the planned rate. So if it's 95.95, that means I'm progressing at 95% of my planned rate, okay, which is not bad, 95%. If it's 1.01, I'm progressing at 101% of my planned rate. One way to memorize these formulas, because some of the questions will be using these formulas or applying these formulas to answer the question. And so one way to memorize it is if you look at these first 4 formulas, you see in every single one of them earned value comes first. So that can help you to evaluate or to memorize rather the formulas. Earned value always comes first. Okay, just to help you out. Maybe that's a trick to help you memorize these formulas. Because of course in real life, if you use this, you have a tool, a computer application that's calculating this for you, and you don't necessarily use the formulas every day, and it may be hard to remember them. Now, estimate at completion, you see various formulas. Those various formulas are based on certain assumptions, and so that's what these over here are telling you. Estimate at completion, again, is my forecasted amount of money that I will spend by the time I get to the end of the project. And keep in mind we're usually managing, or the PMBOK is assuming we're managing a 3, 4, 5-year project, and I'm in phase 2 of the project, and I want to estimate or forecast how much I'm going to spend by the end of the project. And these are various formulas for doing that. The first one is BAC, budget at completion, the money that has been allocated or is my baseline budget, divided by CPI, which is how bad it is or how good it is, if you will, the CPI up here, or the worth I'm getting out of every dollar spent. So your assumption is that all of the future work is going to be performed at the same rate as the current CPI. So if CPI is 0.95, I'm about 5%, I'm roughly 5% over budget. So, and I assume that the rest of the work will progress at that. So my BAC will be, my EAC rather will be BAC divided by 0.95. And that may be a valid assumption if you've got the same team working all the time on the project, and then therefore that may be quite a valid assumption. The next formula is AC plus BAC minus earned value. BAC minus earned value is the budget for all the remaining work, right? Earned value is the budget for the work that has been completed. So this would be, if I subtract that out of my BAC, then it's the budget for all of the work that's yet to be completed. And I add then to it my actual cost. And that basically, the assumption is that while I may have been, or my CPI may be 0.95, my assumption is the remainder of the estimates or the remainder of the budgets are valid. And that may actually be a good assumption if you've got contractors working, and maybe the contractor who was 5% over budget or progressed its 0.95 has completed their work, and you've got other contractors working, or you've got your own people working for the remainder of the project, and so you trust those estimates better. And therefore that may be a proper estimate. I see a question about what about risk management? Risk management would be, that's a good question, risk management is included in your budget. As after we've assessed the risks, then we would include contingency reserves in our budget. We usually do not allocate those. Those are set aside, and we do not include them in our earned value formulas. That way, if I am, let's say if I've got 5% or 10% even, most commonly we have often have around 10% for reserves in our budgets. And therefore, if my CPI is 0.95, I know that I'm really, although it looks over budget, I'm really under budget because of my reserves that I've got set aside. BAC is budget at completion. That's my allocated budget without the contingency reserves in my budget. So that is the budget for every single work package summed up, and I've got the entire project budget minus reserves. So it's not my baseline. My baseline would include the contingency reserve, but my BAC is my apportioned or my allocated funds, or distributed funds is what the PMBOK would say, that I've distributed or allocated to each one of my work packages. And now let's go on to the third formula for estimate at completion, which is AC plus BAC minus EV divided by, the BAC minus EV is divided by CPI times SPI. So this is factoring in, it's similar to the two above, but we're adjusting the future work, the budget for the future work or the remaining work, by a combination of CPI and SPI. So we're factoring in the effect of both being, let's say, over budget maybe and ahead of schedule, or under budget and behind schedule, that sort of thing. We're factoring that into the estimates for the future and adding that to our actual cost, which may also be important. And then the last one is AC plus actual cost plus estimate to complete. This is done when we reevaluate the remaining work, when we reestimate. At major milestones, you typically will do that on these large projects. So we get to the end of a milestone and we reestimate, or we estimate the details for the next phase at a minimum, and so we have a new estimate, and that's our new estimate to complete, and we add that to our actual costs, and that's another estimate at completion. Test questions that come up about EAC. If you're asked to estimate the estimate at completion or to derive that, then read the question very carefully and assess what the underlying assumption is that they're giving you. they will give you some information about, or they could give you some information that would drive you to the second or maybe the third one of these. If they do not, then assume the first formula. The first formula is the most commonly used formula, and unless otherwise stated in the question, and there's a lot of scenario type questions where they tell you a lot of information and then they ask you a question about it. If they don't give you any information that is about the assumptions, let's say you've got a new contractor or something like that working, then use the first formula because that is the most common. Estimate to complete is EAC minus AC. Estimate at completion minus actual cost. Again, that's the amount of work that we're projecting. In the cases, other than this third one situation here, when we are in the middle of a phase, we're not taking time to stop and re-estimate the remainder of the project or the next phase at a minimum, then we use one of these formulas and therefore we need to derive or calculate estimate to complete. In this case, we don't use that formula, but what we use is, what this means is I am re-estimating the remainder of the work. Variance at completion is BAC minus EAC, which is, again, telling the powers that be, or us as the project managers, that the amount that we're going to be over budget or behind budget that we're currently projecting at the end of for the end of the project. Similar to cost variance and schedule variance, negative numbers mean that you will be over budget. We're projecting or forecasting will be over budget. Positive numbers we're projecting that will be under budget. And then finally, TCPI, to complete performance index. This is a way to assess how productive we will have to be for the remainder of the project in order to stay within budget. All right, this one really is telling us as project managers just how, that's another way of looking at this, I guess. SPI and CPI tell me how bad it is, as I said before, or if CPI is 0.95, then I am proceeding at 95% of budget. However, to complete performance index is saying, well, how productive do we have to be for the remainder of the project in order to meet our BAC? Okay, so the first formula is BAC minus EV, in other words, the amount of work left, BAC minus EV, BAC divided by BAC minus AC, which is the amount of budget left. And this reverses over CPI and SPI in terms of interpretation. If CPI is below and SPI are below 1, then you are over budget or behind schedule. In this case, it's bad to be over 1. What this is telling you is if it's less than 1, that means that you've got some room to play in your budget. You're proceeding at less than you need to be. You're under budget, essentially. But if it's over budget, and let's say it's something like 1.25, that means that for every $4 left in my budget, I've got to get $5 worth of work done for the remainder of the project. Or if you look at it in another way, for every 4 days worth of work, for every 4 days of work that gets done, rather, I've got to get 5 days of planned work completed in order to get back to my BAC. So that's telling you just how productive you have to be, and is that realistic for the remainder of the project? Essentially, you need to ask yourself that. Keeping in mind BAC does not have your contingency reserves in it, so there may be some additional funds that can help you out if you're over budget. The second formula is BAC minus EV, the amount of work left, divided by EAC minus AC. And that's the amount of budget I truly have. And this is used when you've had approved additional budget. Sometimes in the middle of a project, there may be a reason why our stakeholders or our sponsor allocates additional funds to our project, and so we want to incorporate that into our TCPI. Or one thing you could do is, if you are asking yourself, is there enough money in the reserves to stay within budget, you might use that. Your BAC plus your reserves is your EAC, and look at TCPI to assess whether or not I think I could stay within my current budget, my true baseline budget. So that's another formula. They do test on this. A past student that I had in one of our Simplilearn classes back last summer emailed me after she passed the exam. She did pass the exam, but she said she had 2 questions that were very difficult in her interpretation. She didn't go into details about it, but they were related to, they were TCPI questions. She had 2 of them on there. So just to give you a heads up, that can and often does appear in the exam. Now, here's an example to work through, and feel free to answer these questions yourself. Here's a software development project with 4 phases, and each phase is planned to occur in 1 month and in consecutive months, and each phase is planned to cost $10,000 rather, $10,000 per phase. So given this project, the phases are planned to be completed one after the other given the project status. At the end of 3 months, again, there's nothing in month 4 because that's we're basically assessing at the end of this month, and calculate the cost variance, schedule variance, CPI, and SPI. Given the status that we see here, where phase 1 is complete and we spent $10,000, phase 2 is complete and we spent $12,000, phase 3 is in progress and we spent $9,000 so far and we're only 50% complete. The project level planned value at the end of month 3. What is planned value for this project at the end of the 3rd month? $30,000, yes. Good, it's green. Okay, $30,000 is the planned value. Now what's the actual cost? And $31,000. Yes, the BAC is going to be $40,000. That's the $10,000 for each one of these. So the BAC, I see that question there, is $40,000. So $31,000 is the actual cost. And then what is the earned value? What's the budget for the completed work, which is 2 completed tasks and 1 task that is 50% complete. It's a $10,000 budget, so it's 50% of the $10,000. We've spent $9,000, but it's 50% of the budget. So that would be $5,000 for this task, and add it to the first 2 tasks that are completed. The earned value is $25,000 in total. So here's what we see there then. The planned value is $30,000, as we said before. The earned value is $25,000. The actual cost is $31,000. The cost variance here is the earned value minus the actual cost, and that is a negative $6,000, and therefore you are over budget by $6,000. That's the interpretation. The schedule variance is $25,000 minus $30,000, or minus $5,000, so we're behind schedule by $5,000. And then the CPI is $25,000 earned value divided by actual cost, so 25 divided by 31, or 0.8. We're getting 80 cents worth of work out of every dollar we spent, and 25,000 divided by, and the SPI is earned value divided by planned value, and that's 0.83. So the project is progressing at 83% of the originally planned rate. All right. Now, one of the things to keep in mind, a test question may come up about SPI, and it's something like this. It indicates that we are behind schedule, but the critical path is showing that we're on schedule. Is that possible? And the answer is yes. This is telling you that we're behind schedule on tasks that are not critical. So the critical path may not indicate that you're behind schedule. It's another beauty of earned value, but there's a lot of non-critical work that is behind schedule, and that may mean a couple of things. One is that work needs to be completed before the project gets completed, so there's places when we start evaluating the details, let's look at those tasks that are behind schedule and ask why. And it also may mean that the critical path is about to change because some of these non-critical activities are slipping enough, maybe slipping enough that the critical path will change as well. So there's good information included in earned value if you aren't using it already and this isn't intuitive to you. So we're over budget and behind schedule. And this is another type of question that can come up is they can just give you these numbers, by the way. You may not have to calculate, let's say, cost variance. They'll just give you this number and ask you to interpret it. That's why you need to know negative numbers are bad. That's another thing that helped me memorize these formulas because I didn't use this as much as I, at the time I took the exam as I do now. So I'm over budget by $6,000, and again, if they give you the $9,000, the minus $5,000 rather, I'm behind schedule. Sometimes they might give you cost variance and schedule performance index and ask you to interpret it. Again, there's no difference in that. It's just this is telling you you're behind schedule, that's telling you you're over budget. So any of these can be used with them. They also, and they give you, by the way, the questions are very, very wordy. They basically are very, very long questions, and they'll give you a lot of extra information that you don't need for answering the questions with them. So I often, when I was taking the exam, I would really quickly read through until I get down to the question, and then I would go back and look for the actual information that I need to answer the question as well. Because they give you a lot of scenario-based questions, I call them, or illustrations, or where they just describe a situation where you're in the middle of the project, you've just taken over the project, and this is your first status report, and you have this information and that information and that information. What's your interpretation of the project? Something like that. So they do ask they give you a lot of information, some of which is not necessary to answer the question. The formulas, okay, the formulas here are in the example. The plan value is, again, for the project, is the budget for all of the work that we scheduled to have completed. So for this project, that was 3 complete tasks were supposed to be completed after the end of 3 months, and each task had a budget of $10,000. So the plan value is $10,000 plus $10,000 plus $10,000, or $30,000. The earned value is the budget for the work that was completed. The first 2 tasks were completed, but the second task was only 50% complete. Therefore, that's $10,000 plus $10,000 plus $5,000, giving us $25,000. The actual cost was simply given to us over here in this last column, and that was $10,000 plus $12,000 plus $9,000, or $31,000. And then the cost variance is earned value minus actual cost. Earned value, $25,000, minus actual cost, $31,000, which is a negative $6,000. So we're over budget by $6,000. The schedule variance is $25,000 minus, which is earned value minus plan value, and that's $25,000, our earned value, minus our plan value of $30,000. So that is 25 minus 30 is minus $5,000. Project is behind schedule because it's a negative number, and it's behind schedule by $5,000 worth of work. Cost Performance Index, CPI, is earned value divided by actual cost, 25,000 divided by 31,000, or which is 0.8. So we're getting 80 cents worth out of every dollar spent. Schedule Performance Index is earned value divided by plan value, 25,000 divided by 30,000, which is 0.83. That means that the project is progressing at 83% of the planned rate. We'll go briefly go through again what you get from Simplilearn, and then we'll open it up for general questions about the exam or PMP with Simplilearn. Again, what you get with Simplilearn is you select a convenient batch of courses that you are attending or sessions that you can attend. If you cannot attend, for example, this was we take our 4 days with our webinars and break them up into half-day sessions over an 8-day period or 4 consecutive weekends. And then you could go in and say you couldn't commit to every weekend for the next 4 weekends, but there are other classes you could attend, or maybe you had questions and you could go back and sign up for them too. You can basically, even though there's only 4 options, you can attend one session here and one session there to make sure that you've got the entire set of sessions covered, even though into your own busy schedule. We kind of try and accommodate your own busy schedules by offering multiple options there. And you don't have to stick with just one option. You get quality learning from us. You get high quality e-learning with our webinars. You get also various videos, engagement and assessment videos from us. In these, basically when you enroll in one of these, then you get access to our website, to your account on our website, to the course, and then you get lots of additional information, including the lectures. And the lectures are recorded and you get access to those too. You get real-world examples too. There are case studies that you can download and apply and help you to apply to, and that can help you to better understand how to pass the exam if you understand how these are really applied. Also, during the lectures, there are end-of-chapter quizzes and tips and tricks videos to help participants to understand the exam and practice and give you plenty of practice with exams. And Simplilearn we have for you also 5 online exams that simulate the PMP exam, because they're timed. Basically they're timed for 4 hours. They're 200 questions, and you get to practice the timing as well as answering the questions. So you get from us, again, 32 hours of instructor-led training, 29 hours of content, 5 industry case studies, 20 real-world examples, 83 end-of-chapter quizzes. There are quizzes within the chapters, and then there are external quizzes also that you go and you download a file and you look at that and you practice quizzes for every knowledge area. And there's a downloadable ebook which follows the lectures, and of course glossaries and process charts to help you study for and understand the exam and the contents of the PMBOK, and of course tips and tricks videos and reinforcement videos. If you have questions, by the way, when you take an exam, after you take one of our courses, we have a forum called Simply Talk that allows you to post questions and get answers from a wide audience. All of the instructors are encouraged to participate in the forums and to answer questions that people have when they're preparing for the exam, that sort of thing as well. So there's lots of options with our courses to get questions answered. Here's a good question I see. If I take the class next week, when do you expect to take the exam? A rule of thumb that I have heard is that after you take one of our courses, or after you complete the course, let's say, although I guess if you're taking maybe over the whole month, this would apply, about 100 hours of study on your own time in addition to the courseware. And that would include, of course, like taking a practice exam. So if you take 4 hours of practice exam, or you take all of 5 of our practice exams once, there's 20 hours. So roughly 100 hours of study is something that I have heard as a rule of thumb. And past students who, again, sometimes email me have kind of sometimes verified that's what they did. Some went over that too. Some people prepare quite intensely for it because they want to make sure they pass it the first time. Trying to go for MBA and project management next year. How would the PMP certification at this time help in your future endeavors? The PMP, I would assume, help you in your career. The way I look at the PMP is that it helps you in your career because it is oftentimes something that employers look for in hiring project managers. So it would help you to be more likely to get an interview with a company if you've got your PMP. The MBA program, it might serve the same thing. I'm not exactly sure how that would apply with that. It might help with that. It would certainly prepare you in order to understand the PMBOK. I would assume that any MBA program or a college program in project management has the PMBOK as its underlying basis. And then your college program is going to teach you how. It's going to focus more on using the PMBOK and other resources. The PMBOK is a standard, but as you all know, standards apply and don't apply. There are times when a standard, and the PMBOK even states this up front very early on, maybe in the introduction, that these are tools and techniques that seem to work most of the time, but they don't always work all of the time. So what your MBA program would do is take that PMBOK and the PMP and add depth to it, let's say. How many questions is in PMP exam? The PMP exam contains 200 questions and it's timed to 4 hours. So you have to complete all 200 questions within 4 hours. Only 175 of those questions are scored. 25 of those questions are a part of a vetting process, but you don't know which ones those are. So you need to do your best to answer all 200 questions. How much edge does the PMP certification have over other project management certifications? It's the most widely attained. Many organizations are asking for PMPs, so it probably gives you a little bit more of an edge, but it also depends on the organization. If you work in IT, for example, where Agile, and particularly, or if you're wanting to work for a company that does Agile projects, then you probably would want more to go into the, I think it's the PMP ACP, which is Agile certification, something like that. So there is a separate certification for Agile projects, which are small. Basically, they're very, very different. To manage a very large project, which the PMBOK or the PMP exam assumes is very different from managing a small project like an Agile project. Yes, you should be able. There's a question, can we take the PMP exam at any Prometric center or any specified center? And the answer is yes, at Prometric here in the U.S. If you're outside the U.S. offshore, I would call it, then there may be another company. There at one time I know there was another company that's used offshore, and if whichever one, then yes, any of those centers should have that test available to them. As I'm from non-IT background, after completing the PMP, do you think an IT company would consider me for their PMO? It depends on the company, because there are companies that do that. I know of one company, AOL, has a software development center in, I think it's Ireland. And that Irish subsidiary went out and hired experienced project managers from different industries to manage the software developers. They thought it would be easier to teach a project manager, a good project manager, about software development than it would be to take a good software developer and teach them project management. So they did that, and then they found it very successful. So some companies are willing to do that. Other companies seem to believe that you need to have the IT background in order to manage projects. My own personal opinion is that it's not true, and I would think, and the way that the PMI addresses that is they say that there's much you can learn. There's a lot of commonalities in managing projects, and therefore we share with each other and to develop like the PMBOK. It comes from many industries. There's a question here, does it carry a negative marking? If I understand that question correctly, the way they score the exam is they just score the correct answers. So, and they do not publish how many questions you have to get right to pass the exam. They used to. It used to be at one time it was 70%, and then they announced they were increasing it to 82% or something like that. Questions had to be correct in order to pass the exam, but they stopped publishing that, so you don't really know. Now, I've seen bloggers on who focus on the exam say that they estimate that it's over 80% now that you have to get right, but they don't really tell you. What they tell you in the end, once you hit the submit button, then you actually go out of the room and you get a printout of what your score was, but your score is pass or fail, and then by I guess by the knowledge area, not knowledge area, the process groups, they tell you, were you moderately proficient, below proficient, moderately proficient, or proficient? And they give you that ranking, one of those three, for each of the 5 knowledge areas. That way, if you did not pass it, you know where to focus your studying, which is on the places where you were below proficient or moderately proficient. But they don't subtract. Like if you hit, out of the 200 questions, if you got 100 questions right, then your score would be 0 because you got 100 for the ones you got right, and they subtracted the 100 out. They don't do that. They simply, your score would be 100 out of the 200. But they don't tell you how many you got correct. How many days prior to the exam do you think we should schedule for the exam? It depends on the center where they're doing it. Some places are quite busy and some are less busy. At this point in time, because the exam is changing in less than a month, on January 1st, the exam is changing, I would assume that there's a lot of people, and this happens every time they change the exam, a lot of people want to take the exam because they've been studying the current version and they don't want to have to change the way they studied. And in fact, I did that when I took the exam. I was getting in right under the wire before the exam changed myself. So they get busy on that. And I planned it a month in advance, and I still had to go to a different city to actually take it from where I lived as well. So if you're planning on taking it before January 1st, I would schedule it as soon as possible. If you have not applied yet, it takes 2 weeks to apply, so it's going to be quite challenging. Will the change in the exam require any change in preparation? Will the exam change in the exam pattern require any change in preparation? Will they change in the exam? Probably. I don't know yet. I have not heard anything about what the changes in the exam mean or will be. So I honestly don't know the answer to that. I haven't looked in it because I don't want to confuse myself. I'm still teaching a couple of exam prep courses, so I don't want to confuse myself, but I would assume it does. What is the PMP exam fee? Here in the U.S., if you are a member of PMI, it's $405. If you are not a member of PMI, it is $555. So it's $405 if you are a member, and it costs you $125 to join PMI. So it saves you a little bit of money or some money if you join PMI, but it's not a whole lot of money either. Here's a comment. I guess I have already registered, just have to schedule the exam, so I guess it can be done before the 1st of January. Yes, I would do it as soon as possible, though. Again, it depends on where you're at. In some places, maybe the PMP exam is not as popular. I know that it's growing rapidly in South America, for example, so it might be hard right now to get it in South America, but in other places where it's leveled off, it might be a little easier. I'm in IT infrastructure support. Is PMP the right certification? I would say yes. If you're an IT infrastructure report, you tend to, I would assume, manage pretty large budgets, and at least in infrastructure upgrades can be quite large budgets. But yeah, that's probably the best one, unless there's something you want to focus on. There are also certifications in risk or schedule, and so if you want to focus on risk, let's say, then that might be the better one for you. I am in IT infrastructure support. Is PMP the right certification? I would say yes in infrastructure support, because you don't do agile projects, and therefore you would probably want the PMP. And some of your budgets, if you're doing an IT infrastructure upgrade, your budgets could be very large at times if you're replacing an entire data center, for example. So So I would say yes. I want to thank you very much. Hope to see you in a future session with us.